Assalamualaikum warahmatullahi wabarakatuh to the respected FIN546 Islamic Finance lecturer, Madam HASMAH LAILI binti JAMALURUS. My name is Mohd bin Hafizal and I will start our presentation. This group consists of 4 people, namely myself, Muhammad HAIKAL bin ROZAIMI, Muhammad RASHDAN bin HISHAM, and finally ALIFF NAJMI bin YUSOF. We are from class KPA 2423B and we will be presenting the case study of Islamic Unit Trust, which is our group assignment. The primary objective of this report is to comprehensively analyze and discuss Islamic Unit Trust. The report has been conducted and completed with the intention of providing a thorough examination of this topic. Firstly, we examine the features of the instruments, shedding light into the distinctive characteristics. Additionally, the report delves into the Sharia principle compliance employed in the development and operation of the instruments, highlighting their compliance with Islamic principles. Furthermore, the report includes a comparative analysis between the aforementioned instruments and their conventional counterparts. This comparative assessment aims to identify any disparities and similarities between the two, providing valuable insight into the unique attributes of Islamic instruments. Moreover, a comprehensive case study is conducted to evaluate the performance and viability of the instruments in question. This case study scrutinizes the current situation of the instruments, assessing their effectiveness and suitability within the given context. Lastly, the report presents an examination of the advantages and disadvantages associated with the Islamic Unit Trust. We aim to provide a balanced perspective on the strengths and weaknesses of this Islamic Unit Trust, enabling a more informed understanding of their potential benefits and drawbacks. Islamic Unit Trust funds are a type of Islamic financial product available in the market. These funds comply with the Sharia principles. The Securities Commission (SC) was established on March 1, 1993, with the introduction of the Unit Trust funds to the ICM. The SC is responsible for supervising and regulating unit trust schemes, trust funds companies, and investors. Islamic Unit Trust involve a contractual relationship between a unit trust company and investors, according to Islamic principles. Investment companies with Islamic Unit Trust components must have their own Sharia board. Unit trust is an investment vehicle that diversifies risk by allowing investors to invest in group of stocks. It also allows participants in a long-term stock bond market performance. Islamic Unit Trust screen and remove stock of companies deemed inappropriate for Muslim investors. Islamic Unit Trust schemes must appoint a Sharia committee and ensure their operation comply with Sharia. Islamic Unit Trust can invest in various non-interest-based financial products in conventional financial markets. These products include property, funds, commodities, financial options, futures, and forward transaction in foreign currencies. To benefit from international market growth, prioritize investing in Islamic banks, financial institutions, stock market in Muslim countries, and companies operating under the Islamic system. Unit Trust mutual fund manager invests pooled money in a portfolio that included cash, bonds, deposits, shares, property, and commodities. A Mudharabah fund invests based on profit and loss sharing. A Murabahah fund invests in companies using cost-plus approach. Musyarakah involves a joint venture with the unit trust and a third party. A Jarrah fund finances equipment, buildings, and projects for a third party in exchange for rent. Non-Muslims can freely invest in an Islamic Unit Trust without any restriction. Firstly, the features of Islamic Unit Trust is fund selection process to ensure compliance with Sharia principles through key features. This includes investing only in Sharia compliant companies, appointing a Sharia advisory body for oversight, conducting periodic Sharia audits, purifying prohibited income through charitable donations, and obtaining endorsement from the advisory body. These measures ensure that the unit trust operates ethically and in accordance with Sharia standards, providing investors with confidence in the fund's compliance. Secondly, the regular savings plan offers individual and affordable and reliable investing strategy called dollar cost averaging. By consistently investing a fixed amount each month, investor can take advantage on of market fluctuation and achieve their long-term financial goals. With a low starting investment of 100 ringgit Malaysia per month, and plan provides accessibility and flexibility to investors of all income levels. By leveraging dollar cost or RM ringgit averaging, investors can steadily build their wealth over time and work towards their financial aspirations. For investors with online access to investor investment portfolio through the financial institution's online banking or SC mobile app, they can conveniently check the performance of their investments at any time. Investors have the ability to download monthly portfolio statements and retrieve past statements for up to 12 months. This feature provides transparency, allowing them to monitor and manage their investment effectively. Investors should be aware of the risks associated with Islamic unit trust investment. The value of investment can fluctuate based on market conditions and underlying assets, potentially resulting in the loss of the initial investment. Returns may be impacted by surcharge and annual management fees. Islamic unit trusts have limited investment option and may have a more concentrated portfolio due to adhering the Sharia standards. Investors should carefully consider the pros and cons, taking into account their risk tolerance and financial goals. It is important to note that unit trusts are not principal protected, and past performance does not guarantee future results. Sales charge and annual fees will be deducted, and the constructed halal portfolio may have less diversification, increasing the risk of loss. Investors should refer to the fund prospectus and fact sheets for specific charges and details. Now, I will pass the presentation video to Muhammad HAIKAL.
Assalamualaikum and hi. First of all, thank you to Haris. My name is Muhammad HAIKAL bin ROZAIMI, and now I will talk and explain more further about the Sharia principle that used in the Islamic unit trust. Talking about the issue and topics in unit trust, there are also Sharia contracts that are utilized and also used in the context of unit trust by its user. So the amount of the Sharia contract that are often used in the unit trust, such as mudarabah, wakalah, ijarah, murabahah, and furthermore. So the Sharia contract of the are closely related to the user that involved in the unit trust issue. Then we proceed with the Sharia principle that used in the Islamic unit trust. The first one is about the provision of the interest rate. By this case, Sharia compliant unit trust avoid the investment that involve the charging or receiving interest rate. This means that the fund does not invest in conventional interest-based financial instruments such as bond and conventional banking product. The rationale behind the provision of the riba is rooted in the belief that money should not generate more money without productive economic activity. So, riba is seen as the exploitative practices that can lead to wealth accumulation in hands of a few, exacerbating social inequalities. Next, we proceed with the provision of speculative and uncertainty transaction, which is haram. Sharia compliant unit trust avoid investment that involve excessive uncertainty, ambiguity, or speculation. So this includes avoiding investment in speculative directive or gambling that related activities. So this method also highlight the transaction where the outcome or subject matter is uncertain, information is withheld, and there is a lack of clarity in terms of the condition. So the underlying principle is to ensure that all the parties involved have a clear understanding of towards the transaction and its consequences. The third is the provision of the investing in prohibited industry. Sharia compliant unit trusts avoid investing in business that are considered haram, which is forbidden according to the Islamic principle. This typically include the industries such as provide like alcohol, tobacco, gambling, adult entertainment, and also the conventional banking and insurance company. And next is the emphasis on ethical and socially responsible investment. So for this part, Syariah compliant unit trust give importance to ethical and socially responsible investment. They seek investment in businesses that promote social well-being, sustainability and also the positive on society. And the last Syariah principle that include is profit sharing and asset-backed investment. For this part, Syariah compliant unit trust typically follow a profit sharing model rather than guaranteeing the fixed return. So the fund that invest in asset-backed instrument and participated in the profit and losses of the underlying instrument. That's all from me, and I will pass back to the next presenter, which is RASHDAN.
Thank you, HAIKAL. Assalamualaikum, madam. My name is Muhammad RASHDAN bin HISHAM, and today I am in charge of sharing the comparison that we have made between the Islamic unit trust and its counterpart, the conventional unit trust. Now, without further ado, let's look at the first aspect of comparison, the investment philosophy. Islamic unit trusts adhere to Islamic financial principles founded on the Quran and Hadith teachings of the Prophet Muhammad. These principles forbid riba and gharar, which are interest and excessive uncertainty. It also follows the risk-sharing concept and prioritize investments in halal and permissible assets according to Islamic principle. In contrast, conventional unit trusts are not restricted by any particular faith and are free to invest across a wide range of businesses and different types of assets as well. The second difference can be seen in the scoring process. There is a stringent scoring process for Islamic unit trusts to ensure they comply with Sharia law. Assets are often chosen for the scoring process based on predetermined financial parameters and company operations. Investment in companies producing or dealing in alcoholic beverages, firearm or pork products are prohibited. But in the case of conventional unit trusts, no scoring procedure is conducted based on religious requirements. Moving on, the third and fourth aspects include the two prohibited elements that I have mentioned before, which are gharar and riba. For Islamic unit trusts, excessive ambiguity or speculation is forbidden. Investments in highly risky or unpredictable activities such as derivative trading or gambling are avoided. On the other hand, speculative activities have the potential to be integrated into the investment portfolios of conventional unit trusts. As for riba, interest is forbidden in Islamic financial transactions. As a result, conventional banking operations and interest-bearing assets like bonds and fixed deposits are avoided in Islamic unit trusts. On the other hand, there are no limitations imposed on conventional unit trusts when it comes to their ability to invest in products that generate interest. Then, there is also a difference in the covenants and supervisions between these two types of unit trusts. Sharia boards or committees comprised of Islamic scholars often provide extra governance and oversight to Islamic unit trusts. These boards analyze investment choices and guarantee that they adhere to Islamic criteria. As for conventional unit trusts, the same financial regulatory bodies govern them as other types of trusts, and they are not subject to any particular religious scrutiny. Henceforth, they can also be compared through profit and loss sharing. As for the Islamic unit trust, investors receive a portion of the earnings made by the underlying investments or assets in direct proportion to the capital they provide. Meanwhile, investors in conventional unit trusts are guaranteed a certain return on their investment in the form of a dividend, regardless of the extent to which the underlying assets have performed over time. Other than that, ethical considerations also play a crucial role in differentiating these two types of unit trusts. In line with Islamic belief, Islamic unit trusts prioritize investments in law-abiding businesses. This means avoiding the stock market and any company that deals with alcohol, wagering, tobacco products, or firearms. On the other hand, the conventional unit trust structure does not include any particular provisions for ethical concerns. Lastly, we can also compare them in terms of income distribution.
Profits and losses in Islamic unit trusts are split between investors and the fund management firm following established percentage. Profits are distributed in a way consistent with Islamic accepted practices, which forbid the giving or taking of interest. Conventional unit trusts do not impose any particular religious constraints on the distributions of earnings to investor and instead base distributions on the performance of the fund as a whole. That's gonna be all from me. I'm going to pass the presentation floor to my friend ALIFF. Thank you.
Thank you to Mohd RASHDAN. What an excellent explanation given by him. My name is NAJMI bin YUSOF and I will be in charge of presenting the case study. The case study that our group have picked for this particular assignment is titled Comparative Study of Conventional and Sharia-based Unit Trust Funds Performance of Public Mutual Berhad by Nur Afrika binti Norman, Mahmud Khalid Al-Musafir and Aiman Smadi. So basically, this study is made to examine the performance of Sharia-based and conventional unit trusts managed by Public Mutual Berhad solely based on their return performance. Data used in this study are collected from the company's website, annual report, and funds prospectus. The sample used consists of 7 conventional equity funds and 7 Sharia-based equity funds. So, there are 3 methods used to assess the return performance: Sharpe Index, Trending Index, and Jensen Index. The findings indicate that conventional funds outperform Sharia-based funds in non-crisis and post-crisis periods, while Sharia-based funds exhibit better performance and outperform the market during crisis periods. Overall, it can be said that conventional funds are more sensitive to the change in the market compared to the Sharia-based funds for the whole period, although conventional funds are less sensitive to the changes in the market during non-crisis period. It also can be said, based on the findings, that economic condition and risk-return profile are related and have relationship with the fund's performance. Moving on to advantages and disadvantages. As you can see, there are 4 advantages and disadvantages each. First, let's look at the advantages. By investing in Islamic unit trusts, investors gain opportunity to invest in manner that is consistent with each individual's religious beliefs, since the unit trust is strictly adhere to Sharia principle. Other than that, Islamic unit trusts do follow ethical screening, which can avoid investors from investing in business that do not comply with Sharia law and Islamic principles such as business that involve alcohol, gambling, and tobacco. Investors that invest in Islamic unit trusts could potentially achieve better overall returns because these funds invest in a range of Sharia-compliant assets, which help to spread risk. And last but not least, by investing in Islamic unit trust is a long-term focus, meaning that it encourages long-term investment which align with the principles of sharing risks and rewards between investors and business. Moving on to the disadvantages. Firstly, Sharia compliance may be equipped with stringent criteria that lead to limited investment options, which potentially result with lower returns, compared to the conventional funds which can be invested more broadly. Investing in Islamic unit trusts may charge higher fees due to the specialized expertise required for Sharia compliance. Next, diversification opportunities may be restricted because certain industries or sectors that are not Sharia compliant might be excluded from the fund's portfolio. And last but not least, Islamic unit trusts are not universally available in all regions, which lead to limited access for some investors. That is all from me. I will pass on to the next presenter, whom is Muhammad HAIKAL.
Thank you to ALIFF, and now I will continue for the last part, which is conclusion. So in summary about this topic that has been discussed, Sharia compliant Islamic unit trust provide investor with an opportunity to participate in the investment activities and circle that are in line with the principle of Islamic finance. These unit trusts operate under specific contractual arrangement that comply with Sharia law and also ensuring the investment are ethically and morally aligned with the Islamic principle. Sharia compliant unit trusts also offer a range of investment options including the equity fund, sukuk fund, and real estate fund, and the other asset classes that adhere to the Sharia guideline as well. These investment options are designed to avoid the prohibited activities such as interest-based transaction, speculative activities, investment in industry deemed non-compliant with Islamic principle. By investing in Sharia-compliant unit trust, investors can align their financial goal with their religious belief. They have the opportunity to participate in the investment that promote ethical and socially responsible practices while avoiding investment that conflict with their values. This investment vehicle allow individuals to align their financial endeavor with their religious belief, promoting ethical and socially responsible investment. As the demand for the Sharia-compliant investment continue to grow and the availability and variety of Sharia-compliant unit trusts are expected to increase, and providing the investor with the diverse investment options that align with their values and also the belief. So that's all from me and my group members. Thank you very much for listening, and may Allah bless you fi dunya wal akhirah.